So thanks everybody for jumping on. I'm really happy to have with us our friends at Northeast Benefits Management. Daniel Jacobs is going to be joining us. Sherry O'Leary is also on, and I have Anita from NFP also with us. She's going to be monitoring the Q&A and monitoring the chat. If you do have questions, feel free to pop it into the Q&A. We have a lot of people on today, which is why I did it like a webinar. I usually like to do it like a meeting, so it's a little more interactive, but given the number of people, I kept it at a webinar today. So feel free to raise your hand as well if you've got something that you'd like to unmute with. And we'll get going. So what we're going to cover today, we are going to be talking about ERISA. I'm just going to give you kind of a high-level overview of what that entails. It's one of those terms that you're always hearing about, and I'm not so sure a lot of people really understand what it entails. So we are going to be getting into that. I'm going to have Daniel talking about plan documents, non-discrimination testing, and some of the reporting, the 5500 reporting that some of you will have to do. And then we're going to launch into required notices. And that really ties in a lot with open enrollment, because a lot of these notices you need to be given out once a year when employees become eligible for the plan or when they initially sign up for the plan, and some of them are annual. So we will talk about that in a little bit more detail. We are going to be touching into the realm of legal because ERISA is a law. And I just want to reiterate that none of this is going to be legal advice. We're also going to be touching on some taxation issues. I'm also not an accountant. I'm really just here to kind of fill you in on what your obligations are and hopefully help you to establish some best practices for meeting that. So I think most of you are into open enrollment right now. And what that means is you will be taking a look at some different plan options. You're going to be taking a look at pricing, and you're going to be making a decision as far as what you want to offer to your employees this year. And that's a really tough decision. A lot goes into making that decision. And then you have your open enrollment process where you need to actually be getting your employees enrolled in the plan. You need to be communicating to them what that plan means, what some of the terms mean. And then you have all of those compliance pieces, and some of it is dictated by ERISA. Some of it is dictated by the IRS, and the IRS gets involved because most of you are probably allowing your employees to pay their portion of the benefits plan on a pre-tax basis. And the IRS says, okay, you are allowed to do that, but if you're going to do that, you need to comply with certain ERISA obligations here. So the IRS also gets involved. So if it sounds a little bit tricky, sometimes it is. So NFP recently did a benefit survey. Those of you who are NFP clients, you will be getting a copy of that within the next couple of weeks. And one of the questions that we asked was, please describe any other challenges you and or your organization face pertaining to benefits administration, HR, and retirement. And here's one of the responses that I got. And I pulled this one out because this is typical. I hear this a lot. Everything changes so often in state, federal rules, especially since COVID. Small organizations are struggling to keep up and terrified of messing up. Terrified. I really hope that we're going to be able to take some of the terror out of it and just walk you through what you need to do so that you're not so scared. It's really not that difficult, but there is kind of a lot. So hopefully today, what we're going to do is take a little bit of the terror out of the benefits administration piece. So to cover some of the terms that we in the benefits world like to throw around so that you're familiar with them and you kind of understand what we're talking about. Plan sponsor, that is actually the employer. That's the employer that makes the decision, okay, we're going to offer a health plan to our employees. The plan administrator, on the other hand, is the specific person within your organization, it may be you, who is designated as the one to administer the plan. If you have a self-funded plan, you may be using a TPA, a third-party administrator. So it can be somebody within the organization, it can be somebody outside of the organization that you pay a fee to actually administer your plan. And then these are terms that we're going to be mentioning a lot today. Your fully insured plans, that is your typical, we are on an exchange plan on the healthcare exchange. And we pay a set premium every single month based on what employees are enrolled in what plan. And then the insurance company takes care of everything. They pay all of the claims. And then we have what's called self-funded. And that means you as the employer are actually paying the claims directly out of your own assets. And usually you'll have a TPA, a third-party administrator, actually managing those claims. And bear in mind that during open enrollment, your account executive and your broker are probably going to be going over these terms with you in a little bit more detail. But level funded is the one I just wanted to mention. That would include any of you who are on the Blue Edge business plan. Cigna offers some level funded plans. And I just wanted to make you aware that a level funded plan is a type of a self-funded plan. So anytime that I mention today, if you're a self-funded plan, you need to do this. Bear in mind, if you are level funded, that does apply to you. We have had some clients in the past say, oh, well, we're not self-funded, we're level funded. For the purposes of what your obligations are, level funded is a type of self-funded plan. So anytime you hear the word self-funded or self-insured, if you are on Blue Edge business or any other kind of a level funded plan, your ears should perk up because that does apply to you. So launching into what ERISA actually is, it's an acronym, like so many things are in the HR world, Employee Retirement Income Security Act. And what it really does is it sets the standards for how health and welfare plans are going to be managed. And that would include your group health plan, which is your medical, your dental, your vision. If you offer an HRA, if you offer an FSA, that's all considered part of your group health plan. ERISA also encompasses any kind of life or disability or accidental death and dismemberment, AD&D plan. If you have an employee assistance plan, that's covered under ERISA, and a wellness plan. And what I mean by a wellness plan, it's not, well, we reimburse you for a gym membership. It's a wellness plan for the purposes of ERISA is a plan that's baked into your health plan. So in other words, if you participate in certain wellness activities throughout the year, you might get a discount on your premium. That is what we're talking about with a wellness plan. Those are regulated by ERISA. But if you're just offering somebody a wellness app and saying, hey, you can do, you have access to some online meditation, that's not a wellness plan. But if you do those meditations and then you get a certain benefit out of your health plan, that would be considered a wellness plan. And ERISA is enforced ultimately by the Department of Labor. The EBSA is a division of the Department of Labor. So this is a DOL piece. Some of the key requirements of ERISA, I mean, there are a lot, but I'm just going to go over the big ones, the ones that really do apply to you and the ones we're going to talk about today. Employers have to be providing specific information about their plans to the participants, and that's where your summary plan descriptions come in. So very often we're telling you, well, what does your plan document say? When we're referring to the plan document, you should have one because that is a requirement of ERISA. It also dictates which employees are allowed to join the plan and when. So it talks about you have to be defining when an employee is initially eligible. Is it the first of the month following 30 days, following 60 days, whatever it might be. It also defines when your open enrollment is going to be, and that's your once a year opportunity for plan participants to either enroll, drop, or make a change to the plan that they're enrolled in. And then it also allows for a special enrollment, and that's when an employee experiences some sort of a qualifying event during the plan year that allows them to make a change to their plan. And a good example of that would be somebody gets married, they want to add their spouse to the plan. That's allowed in the middle of the year. And it also says that these plans that fall under ERISA have to guarantee equal accessibility for all employees who qualify for the plan. Meaning, if you say anybody who works 30 or more hours a week qualifies for our health plan, then you can't cherry pick anybody over 30 hours a week who would not necessarily be eligible. Everybody has to have equal access. And that's where discrimination testing comes in. I know that NBM does a lot of that for a lot of our clients. And just to kind of tie it together, that's why we're saying you should be doing discrimination testing on your plan. It's an ERISA requirement. So at this point, I am going to hand it over to Daniel Jacobs from NBM, and he's going to get into more detail regarding your plan documents.
Yes, hi, good morning, everybody. Daniel Jacobs from Northeast Benefits Management. And as Susan mentioned, we'll be going over in the next few slides some common plan documents, ERISA documents, as well as some compliance matters as they relate to ERISA and plan documents as well. So let's start out with cafeteria plans. You might also hear to cafeteria plans referred to as Section 125 plans or premium only or POP documents as they pertain to flexible benefit plans. All three of those are fairly common, so some use them interchangeably. The key is Section 125, referring to Section 125 of the IRS code. Anytime you are talking about pre-tax benefits, whether they're pre-tax HSA contributions, flexible benefit plans using pre-tax dollars, as Susan noted, there are some phrases that you want your ears to kind of perk up. And when you start talking about those pre-tax benefits, that's when you know you're talking about the Section 125 of the IRS code and cafeteria, Section 125, and premium only plans. There are document requirements for these types of plans. They require written documents. They will be inclusive of different details such as the available benefits within the plan, plan year, election procedures, because it's always important to let participants know exactly how and when they're going to be making those elections within the plan. They are also subject to amendments. They need to be updated and kept current. So examples of when amendments might be required or necessary for these types of plans, whether they're federally mandated. We saw some things during COVID, pre-COVID, as well as perhaps it's the group or employer that is changing the terms to the plan. Examples might be if you're adding a benefit that is a good, again, your ears should kind of perk up and remember that these plans need to be amended, so benefits are being added. Specifically for flexible benefit plans, an example might be if you're adopting a carryover. That would be an example as well. And speaking of keeping these documents up to date and current, there are some real consequences if they are not, especially if you do not have one. We do come across that from time to time. Start talking about pre-tax benefits and a group saying, oh, we've been doing that for a while and we actually don't have a document. So again, as Susan mentioned, whether it's Department of Labor or a payroll audit, some of the first things that an auditor might come looking for is there a plan document? Is it up to date? Because there are some financial penalties for not having those documents current. Next slide, please. Oh. Okay, so moving more into ERISA documents, some common plan documents, remembering that under ERISA, it's not just pertaining to medical. There are, and on this slide, there are kind of a host of examples of plans that are subject that you might not necessarily think of. And it's important to remember that it goes beyond medical. So whether it's your dental, your vision, your life, your STD, those are all, pretty common plans, and just remembering that they are also subject to ERISA and needing those documents. There's a couple of little asterisks there, one for the EAP and one for wellness. And there's a footer that says, while EAP plans are almost always subject to health and welfare ERISA laws, both may actually be subject. And that's a discussion that, for example, Northeast Benefits can kind of help parse out, because there are some nuances to those particular plans. And when it comes to meeting ERISA law, it's important to remember that whether you're working with a medical carrier like Blue Cross and the certificates that they provide, or Delta Dental, some of the certificates that they provide, these carriers are not required to provide any type of plan document that meets all of the ERISA requirements. And we'll kind of get into that in a little bit, but that's another piece to remember, that they're not necessarily going to meet ERISA requirements, and they're not required to provide those. So next slide, please. So let's talk a little bit more about ERISA and what it requires, and we'll kind of move into wrap documents as we talk about what is required. So ERISA law mandates that there be a plan document, a summary plan description, as well as a summaries of material modifications, or SMMs/amendments. So those are kind of the key components to ERISA law. And if we pull out SPDs specifically, these are written in plain English. So these are meant for your participants to inform them just, the basics of how the plan works. We want to make sure that participants know exactly what they're signing up for. There are distribution requirements, and some examples to the right there. So within the first 90 days of enrollment, whenever summary of material modification is made, and an employee can request a copy of the SPD, and that must be granted within the 30 days of that request. As I noted, carriers are not required to automatically provide an SPD, and we'll use this as kind of a launch into wrap documents. But that is kind of an important piece. That's just because you're receiving something from a carrier doesn't necessarily mean that it meets all of the ERISA requirements. And there is some required content for SPDs. And again, it's just some examples of what must be in these documents. So description of benefits, ERISA rights for the participants, plan eligibility. Those are kind of the high level, most common examples for what must be in an SPDs. Next slide, please. Okay. So I've mentioned a couple of times that carriers are not responsible for providing all the necessary language, and that is really where wrap documents come into play. You can think of wrap documents as actually wrapping around the carrier documents, all of the things that the carriers provide. Because there is some missing language, the wrap document actually fills in the gaps. It provides all of the language necessary to meet ERISA requirements. It creates an SPD, and as I mentioned, the consequences, especially if the Department of Labor came inquiring, there are some real consequences for not having a wrap document. So that wrap is really important. The wrap document contains a plan document, again, distributed upon request, has an SPD. It contains all of this carrier certificates, some summary of material modifications. All of those comprise the wrap document. When you create a wrap document and it wraps around all of those different plans, there are some administrative considerations. You are in fact creating one document versus several. We will touch on 5,500 filings, but that would be an instance where just, keeping again in the back of your mind that you've created one document for filing purposes versus perhaps many. Once the various plans are included in the wrap document for a particular filing year, all of those plans are considered one. They can be parsed out again, but administratively, remember that you are creating one document when you include them into a wrap. Next slide, please. And again, as Susan mentioned, some of the compliance matters as they pertain to ERISA and plans, plan documents. Annual discrimination testing is a requirement and really important for groups to complete annually. Testing relates to and pertains to Section 125 plans, your cafeteria plans, your premium only, your HRAs, your healthcare flexible spending accounts, your self-funded health, dental, and vision plans. Again, some may be on a Blue Edge business plan, so self-funded, as Susan noted, kind of under that umbrella would be level funded. So all of those requiring annual discrimination testing. Next slide, please. So for 5,500, another compliance requirements, health plans, both self-insured, fully insured, HRA, FSA plans with 100 participants at the beginning of the plan year must file. So these are your health and welfare plans, separate from your retirement 5,500 filings. One of the reasons why a group might work with, especially experts in this kind of realm, is because determining who a participant is can be rather tricky sometimes. There are some nuances to, picking out which are in fact the participants. So it is recommended that, consulting with experts on filing deadlines, distributions of summary annual reports is advisable. Also pertains to group life disability plans with over 100 participants at the beginning of the year. So for the SARs or summary annual reports, they must be made available to participants as well. So that kind of is a common theme that whether it's ERISA 5,500s, there are some distribution requirements as well. Okay.
Thank you, Daniel. So do we have any questions for either one of us?
At this time, there is none in the Q&A.
Oh, wow. Okay, we will move right along. But again, feel free to type in questions if you have them as we go. So now we're going to get a little bit more into what are the notice requirements. And again, this might just be a review for some of you. For others who maybe this is the first open enrollment you've been through, this might be something that you're really hearing about for the first time. So I'm trying to break it down for you. Basically, you have different notifications for different reasons. So you have some notifications that need to be given out when an employee is first hired. You have some that have to be given out when the employee first becomes eligible for the plan. Some of them are once a year, some of them are at open enrollment, some of them are annually, and those annual notices, very often we say just give them out during open enrollment. While you're at it, you might as well do the annual notices. And then there are also some notices that need to go out when coverage actually ends, that being for the most part your COBRA notices, your benefit continuation notices. You are going to be getting a handout. It's an NFP handout, and this breaks down for you all of the ERISA notices. And you'll see it has different columns for when it has to be distributed. And this should be a really, really good guide for you. So make sure that you bookmark that somewhere in your files or you tack it up on your office wall. This is a really, really good guide, and it will help you with these ERISA notices. And we've taken it a step further, and you'll get this as a handout as well. And this is a chart that kind of says the same thing, but it also includes what's called the Declaration of Healthcare form, which we'll get to in a few minutes. That is a Vermont only form. And of course, that's not going to be in a list of ERISA requirements because it's not an ERISA requirement. And what we've also given you here is live links to these forms. And one thing that I want to make sure that you're aware of, you will see when you get this handout, this slide's a little small, but you'll see that it says requires customization. That means that before you give this notice out, whether you give it out electronically, whether you give it out in paper form, you need to customize the form. There are certain things in there that are employer specific that you need to complete. So you just want to make sure that you're not giving somebody a template that isn't customized to meet your employer and your plan information. So those two things will be coming with you as handouts, along with copies of the slides and a link to the recording. So you will have access to all of that. So breaking this out, I wanted you to actually see what these notices look like, particularly if you're new to this and you haven't done this before. When you hire somebody anytime during the year, whether they're eligible for the plan or not, you have to provide them with this notice of exchange form. And the rationale is that this is telling them that there are healthcare exchanges out there and you need to be aware that they're there. So in other words, it's getting the word out to the employees that there are options for covering themselves with healthcare, and that has to be given out within 14 days of hire. And again, it's regardless of whether they're eligible for the plan or not. So even if you hire somebody to work 10 hours a week, they need to be getting that notice. Then we have, as I mentioned earlier, the Declaration of Healthcare form, or the HC2 as it's called. This is a Vermont specific form. And this goes out to any employees that you have working in Vermont. So basically anybody that you're withholding Vermont unemployment tax from has to complete this form. And just a little bit of a word of caution, there is a discrepancy on the form. It says right on there that you're only supposed to be giving this to people who are eligible for your health plan, but yet there were questions in the form that have a response option of, I am not eligible for the health plan and I don't have any other health coverage. So there's a discrepancy there. We've been advising our clients ever since this form came out to just have everybody complete it when they start with you, whether they're eligible or whether they're not. And again, it's only Vermont employees. So if you have remote employees or a facility in another state, they don't need to complete this form. And the reason that you need this, and to try to tie it all in together, there's a part of your quarterly Vermont tax return, your Form 941, and this is where we're getting into accounting, which I don't really do, but there is a section there where you are required to report your FTEs that are uncovered by any health plan and that are not eligible for your health plan, or that are eligible for your health plan, but they've turned it down and they don't have coverage anywhere else. You need to be reporting that. If you have more than 4 FTEs, you do get a quarterly penalty. So that's where the HC2 comes in. That's your backup information for what you're reporting on your quarterly tax form. So the HC2 doesn't need to be sent in anywhere. It's for your own records, so that if your quarterly tax return ever gets questioned, you've got the backup that says, this is why we filled it out this way. So it's really important that you keep these. You're supposed to be keeping these separately outside of the employee file. So if you're not doing that, you should be pulling them out of the employee file, keeping them separate. And the other thing that I wanted to mention is that anytime anybody has a change during the year, say, for example, they have added they've experienced some sort of a qualifying event, so they're now eligible for your health plan. Whereas when they first hired, they weren't eligible for your health plan. Maybe they were hired part-time and went full-time, and now they're enrolling, or now they're eligible. They should be filling out another declaration of healthcare form. So it is something that during the year, periodically, you may need to have employees completing. And these forms need to be retained for 3 years. Then you have your CHIP notice, Child Health Insurance Protection. And again, this is regardless of eligibility, because you're supposed to be getting this plan out to all, this information out to all employees, because you could have employees that are not eligible for your health plan that this might be useful information for. So that goes out to everybody as well. Now, if you have a new hire and they actually become eligible for the plan, that's when you need to be giving them what's called a notice of special enrollment rights. And that basically gives them the information of when they can add and when they can drop medical coverage during the year. Just a little bit of a side note that we are still in a COVID national emergency, and that time frame has been extended a little bit. Most plans are saying 30 days. But again, I'm going to point you back to your plan doc. That's usually defined in your plan document. So in other words, if an employee, say, has a baby and the baby is now eligible for the health plan, they need to enroll that child within 30 days. Your plan may say 60 days. 30 is generally the typical time frame, but check your plan document on what that time frame is. And the notice to employees that they have a right to make these mid-year changes is what needs to go into an enrollment packet so that they're aware of that. And then we have the summary of benefits and coverage. Usually this is produced by your carrier or your third-party administrator. If you are offering an HRA, that will generally require a separate summary of benefits and coverage. So check with your third-party administrator, whoever administers your HRA, and make sure that you are getting an SBC from them. And again, this goes to anybody when they become eligible. So you're disseminating all that very specific information about your plan. And then there's the Medicare notice. And we recommend that you give this to your employees when they become eligible for the plan. And it's a disclosure notice talking about Medicare Part D and how that could potentially be coordinating with your plan. And Medicare, usually you're thinking, well, this employee is not over 65, so why do I have to give out this notice? You don't know who in their family might be eligible for your health plan and also be eligible for Medicare. So it is important that you get this notice out to everybody. The deadline for that is coming up. It has to be done by October 15th. So this notice needs to get out. If you can coincide this with all of your open enrollment materials, that's great. But bear in mind too, this is for the next year's plan year. I think most of the plans that you're offering, and you can check with your account exec, they are going to meet the definition of being creditable. So even if you haven't decided exactly what health plan you're going to go with next year, as long as you're going to go with a health plan, it's most likely going to be creditable, and you're going to be okay sending this notice out, even if you hadn't made that final determination of, well, we're going to offer everybody a silver plan or a gold plan. Both of them are going to be considered creditable, so go ahead and get that notice out. This one also does require customization. So again, you're going to have to work through it. If you have questions on it, you can talk to your account exec. They can help you with that. Then there's a second piece to this Medicare thing. Every year within 60 days of the start of your new plan year, so assuming that your new plan year starts on January 1st, within 60 days of January 1st, you should be going online and disclosing to CMS that you are offering a creditable plan. There's the website that you go to do that. And this tends to slip through the cracks. I don't think there are any penalties for not doing this, but where this comes into play is when you have an employee who's eligible for your plan, who is also applying for Medicare, because Medicare wants to see what they have available through a private employer so that they can coordinate the benefit. So that's why you're doing that. It takes all of a couple of minutes. It's really simple. So after January 1st, just put a little note on your calendar that you need to go ahead and do this CMS disclosure. It's really easy, but it's also very easy to forget. Hopefully, we're going to be sending out some reminders for you as well. So every year at open enrollment, there are a bunch of things that you should be making available to your employees. One of them is the SPD that Daniel talked about. And if you've made any kind of modifications, you've got to get the SMM out to them. There is what's called a HIPAA Notice of Privacy Practices. And again, this is indicated in that chart that you're getting as a handout. And this applies to you if you are self-insured. And just bear in mind that even if you offer a fully insured plan, if you are supplementing that with an HRA and any kind of a flexible spending account, those are considered self-insured plans. So you do need to get this notice of privacy practices out. The Department of Labor does give you a template. You've got a link to it in that handout, and you are going to need to customize it. But again, it's really not hard. It's just a matter of making sure that you're customizing it and giving it out at open enrollment every year. There's also an initial COBRA notice that needs to go out when an employee actually enrolls in your health plan. And this only applies to you if you fall under COBRA, which means you've got 20 or more employees. If you're fewer than 20 employees and you are only subject to Vermont's mini COBRA law, often referred to as Viper, you don't have to worry about this initial notice. If you are outsourcing your COBRA administration, check with your COBRA administrator, because sometimes they send it out and sometimes they don't. They're only going to be able to send it out if you notify them every time you have somebody enroll in your health plan. So if you are not notifying your COBRA administrator every time somebody enrolls, that means this notice is not being sent out by your TPA. So you need to be giving it to your employee. There's also a notice about Mothers and Newborns Health Protection Act. This is another benefit of your SPD. You are covered for that, assuming it's in your SPD. And if you have a compliant ERISA plan SPD, it's going to be there. Same thing for the Patient Protections Notice and also the Women's Health and Cancer Rights Act Enrollment Notice. That's going to be in your SPD. I just wanted to make a little bit of a note here regarding HSAs. Every now and then we get a client come to us and say, we're offering an HSA. We offer a payroll contribution to the employee's HSA. The employee hasn't opened up an account yet, and it's the beginning of the plan year. What do we do with the HSA funds? It still boggles my mind that you get employees who don't open that account because this is free money for them, but some people just keep forgetting. My recommendation is stay on it, make sure well before you make that first, you're due to make that first HSA contribution, that there is an account opened. It will save you a lot of trouble going forward. If this happens, there is a notice that does need to go out to the employee. Talk to your account manager if you're an NFP client, and we can help you with that. But again, being proactive here is probably a good idea. Just kind of take a check of your employees ahead of time and make sure that they've actually provided you with that account number so that you're not stuck with a reject on your first payroll run of the year. When coverage actually ends for an employee, that's when your actual COBRA election notice goes out. And again, you are subject to COBRA if you have 20 or more employees. If you have fewer than 20 employees, you are only subject to the state notification. COBRA will provide if you are large enough to have to comply with COBRA, there is a model election notice out there that you can use. And again, it requires customization. Viper, the state of Vermont, does not give you a model notice. So you're going to, you can use the COBRA notice that's okay, as long as you are giving them that option, but you have to be aware, and this is a discussion for a totally different day, that Cobra is a little bit different than Viper. So there are going to be some things on the Cobra notice that aren't going to be relevant for Viper. So it can get a little bit tricky there, but you've only got 30 days after termination of employment or any kind of a qualifying event that renders your employee ineligible for Cobra. You've only got 30 days to get that notice out. If it's because a child has aged out of your plan or because of a divorce, you've only got 14 days. So this is something that you need to stay on. The only other piece, and this hardly ever happens, is if you have somebody who's out on FMLA, they're supposed to be paying their portion of their medical premium while they're out. And they don't make that premium payment, there is a notice that needs to go out to them saying, we are going to cut off your benefits if you don't give us this payment. And then when an employee ends employment or they lose eligibility for life insurance for any other reason, just bear in mind that there are portability forms and conversion forms if your plan is convertible after somebody leaves. And that's something, again, that your account exec would be able to tell you. So I am seeing some questions, Anita. Do you want to, I don't know if we're going to have time to get to all of them. It looks like there are 10, but let's try it, see if we can go through a few.
All right. So the first one, do you have employees sign an authorization to receive notices electronically? If so, can you share the example?
That is a really good question. What I'm going to tell you to do is tune in next week, because next week we're going to be talking about electronic dissemination of these notices. So, and it's going to take up some time. So next week, I have broken this into 2 different sessions. I used to do it in one. I think everybody gets really tired of being on Zoom for close to 2 hours, and that's why we're doing 2. So please, next week at 9 o'clock, I just sent another announcement out yesterday. Please go ahead and enroll in that. That one should answer your questions. If by any chance you're not able to make next week live, shoot me an email and I will put you on a list to get the recording after the fact. So good question.
Does the declaration of healthcare form need to be completed if employees sign up for benefits and complete open enrollment electronically through an HR portal?
Yes. So that's another good question. We will cover that a little bit with the electronic. It can be done in either paper form or it can be done electronically, but regardless of how it's done, they still need to fill it out.
We had been instructed to do the HC2 at open enrollment to all employees. It only needs to be done upon hire or when something changes.
Nope, it needs to be done once a year. It's annually. So sorry if I wasn't really clear on that. So that is an annual form that needs to be done annually. At open enrollment is the best time to do it. You don't have to do it at open enrollment, but it makes all the sense in the world, as well as when there's a change during the year.
Are all of these required for all employers regardless of size?
Yes.
Our office is small, so we know each other's partners, etc. If we're sure there is no one of Medicare age, is there a Medicare notice still required?
Technically, no. No. If you are sure that nobody has somebody who qualifies for Medicare in any way, shape, or form, then you don't actually need to give that notice out. But again, it just kind of makes sense to do it in case there's something going on there that you don't know about.
On the Medicare Part D form, do you put the employee's info or the dependent's info? That's question 1 or part 1. Since they are asking for the date of birth, what if the employee is not eligible?
Okay, I'm not really sure I'm clear, but I do know that on that form, There's a second part that's actually optional. And I have a feeling that might be what you're looking at, that you can fill it out to be specific to the employee. Just bear in mind, you don't have to do that. You can just send everybody a generic form. You don't need to customize it per employee. And honestly, most employers don't do it. So I would have to actually look at the form. So if you want to reach out to me separately about filling out that second half, or reach out to your NFP account exec if you're an NFP client, we'd be happy to go through that with you.
When you count
Can I pop in and make a comment about sending out the Medicare D notice?
Sure.
We recommend that people send them out regardless, because if there's a situation where somebody goes on Medicare late, they have to provide proof that they were on creditable coverage during that time period. And if they don't have that letter, then they can be subject to an additional penalty. So you want to send those out. It's not up to you to determine whether someone's eligible or not, just send them out.
Thank you, Sherry.
when you count employees to see if the law applies to you, is it employees at a given point in time or total number of employees over the course of a year?
It depends. It depends on what law that you're looking at. So COBRA is different from FMLA. It's different from 5500, what determines whether you need to file a 5500. So it depends what you're looking to do. And I would say to talk to your, if you're an NFP client, talk to your account exec about that. Shoot me a question. It depends on what you're actually looking at. I wish it were all consistent and it were all the same, but in some cases it's how many on the plan year at the beginning of the year. In some cases it's head count. Some cases it's FTE. It kind of depends.
Is it acceptable? These required notifications be made available in an online portal, i.e. benefit enrollment portal or company intranet?
Yep. And that it is. And again, we're going to go over that next week, because long and the short of it is, yes, you can distribute electronically, but there are certain stipulations that certain criteria that distribution needs to meet in order for you to do so.
Keep an HC2 form separate from the employee file. What if it is done on ADP during the onboarding and stored there?
I think that's fine. I would suggest, though, that you retrieve them from the portal and put them into a separate folder so that you're meeting that requirement of keeping them together and outside of a file. So usually when you do things with an online enrollment, you can always download. I would go through and download and put them into a separate electronic file. That would be my recommendation. And
if possible, it would be very helpful if your list of requirements would include who is required to do what. Like form 5500 is only for 100 plus participants. And the last one is the age for Medicare is 65, correct? And is that going to be changing?
Probably not. Right now it's 55, but I couldn't speak for what might come down the pike. Medicare eligibility is different from Social Security eligibility. Social Security is the one that is slowly getting bumped up, but Medicare is still 65 right now. And then the 5500 question, as far as who needs to file it, there is information that we send out from NFP, if you're an NFP client, that speaks to who needs to file a 5500. So if you're not clear on that, either check with whoever files your 5500 for you, if you have an outsourced person doing that, or check with your account exec and we can help you with that.
That's it.
That's it. We got to all of them. Look at that. And I even finished up a little early, which again, I think is preferable to being on Zoom for close to 2 hours. So I hope to see everybody next week, 9 o'clock. It is a different webinar. So again, if you didn't enroll today's enrollment isn't going to do it. You need to go on, you need to actually register for the second one. I will be sending out another reminder next week. Again, I sent one out yesterday, so check your emails from yesterday. And you will be getting a copy of the recording and the slides and the handouts. And after the 2 sessions, everybody's going to be getting a survey, because I really like to have feedback as far as how we did and if this is something that you found helpful or not. So keep an eye open for that. And I'd really appreciate it if you took a couple minutes to complete that when it comes out. So thanks again, everybody. This is our contact information. Feel free to reach out. Whoops. Sorry about that. This is what we're going to be covering next week. Again, you can see we're going over the dissemination of the notices. We're going to go over a little bit more regarding best practices and what your obligations are under the ACA. So hopefully that'll be helpful to you. Here is all of our contact information. So if you want to reach out to any one of us, feel free to do so. And hopefully I will see you next week. Thank you, everybody, for coming.